Hello, hello. Welcome to today's session, Finding Future Stock Leaders, report that we put out once per week. This was supposed to go out at 7 in the morning, but I think I scheduled it wrong, so I think it went out about a half hour ago. I apologize in advance for that. Don't know what I was thinking earlier this morning as I was finishing up writing it, but Future Leaders report out. Essentially what we're looking for are newer stocks in the market that are either breaking out into all-time highs or have completed some sort of accumulation base or stage one if you're a Stan Weinstein type of trader. We're looking for that new uptrend, right? So we're looking for generally smaller market weighted types of stocks breaking into obvious areas where we probably want to grab them into strength, right? And I do want to point out that before we actually look at the report, today's report was a little thinner than usual. Normally we try to grab about 30 stocks, gives us a good opportunity to look through some of the leaders. But due to the market pulling back over the last 2 days and market breadth kind of following suit, some of these future leaders, particularly because they're higher beta stocks, have just pulled back a lot as well. And so I felt like it was a disservice to throw 30 tickers on there, particularly if the last 10 of them are like 20% away from their 52-week highs. You know, for the most part, those are probably not going to be buyable names at this point. Maybe in a couple of days, but maybe by next week when we put out the report. But as of right now, kind of off the radar. So we chopped off some of those that didn't really make a whole lot of sense. And what I want to do here is kind of show you that report and then go through some of these stocks on a stock-by-stock basis. So we're going to go ahead and flip on over to Discord. And this is the report that went out this morning, the Future Leaders Report. I want you to kind of take a look at this report. And the first thing I want you to notice is, and kind of like what I've been talking about, every day when we go through these reports, there's a different report every day, by the way. We look at different parts of the market. If this is something that you're interested in, it's free. Send it out every morning, 7 a.m. The link is in the description below. It's for the newsletter, right? So what I want to focus on here and what I feel like I've been saying for the last like 2 to 3 weeks is that a lot of these names are repeat names on these lists, and that's on purpose. When we find ourselves, particularly in a group of strong stocks, it's the same names that are going to be leading week over week. And from a trading or an investing standpoint, if you've noticed that the same stock is on these kind of leadership boards, it's up to you and go and find if there's an opportunity to own these types of stocks. Is there a level that you can risk off of? Is there an available play on the options chain if you're an options trader? But seeing these same stocks on the list week over week should give you some vigor that maybe you should go and own it. This is kind of a self-fulfilling prophecy. We're seeing strength week over week over week in the same names. At some point, you got to go and look at them and potentially own them. So that's kind of the theme over the last few weeks and kind of what we've been seeing in these reports that we put out every day, a different report, but the same names are showing up. We're looking at different parts of the market. I mean, how many different reports has ON showed up on? How many different reports has Hood showed up on? Not only future leaders, but up and comers. Growth leaders report. Some of these things are multiple reports they're showing up. This is the kind of strength we want to own in a market, particularly in a second-year bull market. Not saying it's the easiest bull market to own stocks. As a matter of fact, something that we were just talking about inside of TTI was that owning the right type of stocks is almost more important than when to own the types of stocks. For example, if you didn't know this, did you know consumer discretionary is the second worst performing sector group going back to August of 2020? I learned that this morning. I had to go check it out. That's incredible to me that stocks like Nike and Lululemon and Home Depot and Starbucks have not performed, or Tesla for that matter, have not performed well during this bull market. So knowing what you own is important. Knowing that these particular stocks are on the list time and time again, week over week, probably a good indication that you should own them. So let's go ahead and start here. Let's go through a couple of these names. Now, a couple of these names we already have exposure in, and you might have exposure in too because you've been following along on these lists. I want to point out ON first, obviously. This stock has been on our list for like the last 3 weeks, a couple different lists that we put out the reports, and we really wanted to own it above 36.5. We had this trade idea on there, and we had a bunch of people that were able to grab it on a pullback day. And now this is one of those types of situations where these are the types of trades that we really live for inside of TTI. It's a super easy read. So it's just a horizontal level breakout, 36.5. There's really no opinion or bias on that whatsoever. It's a straight line across the board. Own it above the line. Sell it if it crosses back below that line. We had momentum on our side. And the reason why this has turned into really the stereotypical TTI trade that goes well is that we were able to turn this trade free within a relatively small amount of time. So at 100%, what we're looking to do inside of TTI is close half of the position if you're trading options, and if you're trading equities, move that stop up to the break-even price point, and then let this thing continue to ride to the price targets, right? We want to have stress-free trading. So if you're in an equities trade, by moving that stop loss up to break even, the only thing that you're potentially going to be spending at that point is opportunity cost if the stock doesn't move quick enough, but you're not really risking any amount of capital in your account. And from the options side, if you remove half of your trade off of the books at 100% or maybe even more, you cannot lose anything in your account. You're only playing with house money there. So covering our risk as soon as possible is paramount within our system. The way we teach it, the way we trade it, everything that's written up from the trade ideas is with that perspective. We want to cover risk first, and then we seek reward. As of right now, ON. This is a free trade. We're in profit. We're looking for the first price target here at 44.5. This has been a trade that we've been in for about 2 weeks now. Continues to impress. It's not just ON. I'm not going to go into the other tickers, but there was a ticker just yesterday or 2 days ago that showed up on one of our reports as well. It's also a footwear and apparel name. It's the entire industry group is moving. And that's an important caveat. It's not just ON. It's not a single stock move. It's an entire industry group that's moving right now. And it just so happens that this particular stock was giving us a very obvious to us risk on, risk off type of situation. So a really good stock to be in right now. If you're in this, congratulations. And if you're in the other footwear and apparel name that we looked at just a few sessions ago, that's working well right now as well. Let's talk about Hood. There's a lot of people there in Robinhood right now. We've been able to add 2 and potentially 3 opportunities into Hood here. This is one of our best managed positions on the year, I should say. It's not necessarily the biggest win, but the way that we've been able to attack this chart has just been picture perfect in my mind. We entered originally off that 13.5 stage 2 breakout back in February of 2024. Just like every other position that we're in, we're taking half off at 100% or moving stops up as soon as we're up 2 or 3x ADR from that entry there. We're able to take some profit off at the 17 area and just kind of sit in the original position. We got a pullback. We don't want to close the trade unless we stop out underneath a level that is to us significant. To us, that's really, were we breaking below 17? Were we looking like we were going to pull all the way back to 13.5? At first, we had no idea, but then we started to consolidate across that 17 area. We saw bullish momentum continue to pick up. So we decided to add in there, and it was the right play, right? We added in at the 17.15 level. We pulled back to the price target. We said, listen, we're already in a free trade right here. We can risk some of the profits that we potentially have on that side of the trade already to enter a new contract here. If it bounces here, it's a good opportunity because we know where we're right and where we're wrong. Below $17, we're probably early or wrong. Above $17, we're in profit. Obviously, we bounced up, and then yesterday we had an internal conversation. Now, obviously, Robinhood had that backside news report that came out that said $1 billion share buyback represented about 5% of the float. Now, obviously, that's going to help in the short term, but we really wanted to see price move with that news, and it did. It showed relative strength all day yesterday. The market was down yesterday pretty aggressively, and Hood was not. To us, that's a big indication that buyers are stepping in and they don't want to sell this stock. We call that relative strength, right? And so we decided to come up with a new plan. We wanted to add in again for the third time and risk that 21-ish area. We said we want to target it, or we want to be in, above that 21 with the short-term target of that original $23 price target. We're just running the fibs up, and then beyond that 29.30 area. So we did add in end of day yesterday. Opportunity now for us to have 3 different positions in Hood, all riding the same initial wave up off of that 13.5 breakout, compounding the profitability of that trade. Now, this last trade that we just took end of day yesterday, not free. I think I'm up about 21% in it right now. So I still have risk technically in this trade, but the last 2 ads here, or the original entry and then the ad, I should say, completely free on the books. And just to put these things into perspective, bought back in February, we're buying August types of expirations back then. This current trade right now is up about 450%. This latest ad is up about 200 to 220%, and this one here is about 20%. So we're stacking the profitability on the trade, riding the exact same wave. It's essentially the same trade idea the entire time, right? Just riding the waves up, taking profits and adding it at logical levels. This is, like I said, when I started talking about Robinhood, kind of a picture-perfect trade for us in terms of management. Next trade I want to point out is GEV. Trade that we really like here. You can kind of have a general idea of how we want to play this. I'm not going to get into it too much because there's still an opportunity for TTI members to get in this, and obviously the trade idea is going to be reserved for them. But you can kind of get the general gist of this. We really like this type of setup. This is just an IPO range breakout high into new highs or all-time highs. We've played this multiple times, this exact same setup. We're in a bunch of positions right now that are legitimately the exact same setup as GEV. Some of the bigger trades that we're in within the recent IPO names looked or started just like GEV. We're going to look at a couple of them in a second. Look at this type of market structure here, and I'm going to show you at least 2 trades we're currently in right now that we opened up off of the exact same breakout, and wait till you see what happens into the future, right? So GEV, we're stalking this. We're looking for a deeper pullback. We like the setup here. As long as we can hold that 170 area, we think this is going to be a great opportunity to buy on somewhat of a BRB, so a pullback in towards the original horizontal level and then a bounce. Just a very basic uptrend structure here that's being placed on GEV. The next stock that we don't have a position, I just want to point it out. I don't know why, nor do I necessarily care. We don't have a position in Burke right now from a community standpoint, so I'm going to delete that so it doesn't confuse anybody here. We did trade Burke earlier in the year. I guess it was late 2023 now. It was a winning trade the first time we took a crack at it. We tried to take a crack at it again. It didn't work that time. We've just been out of Burke since then. You can see as long as we're trapped underneath that 50-51 area, for us, it's not really worth our time. We want to see strength here. But I just want to point out that for whatever reason, apparel is absolutely beating the market right now. Abercrombie and Fitch kind of leading the way, but it's not just Abercrombie and Fitch. You know, you have names like Crocs right now that's up and to the right. You have ONON that's up and to the right. You have Birkenstocks that's up and to the right. Once again, I couldn't tell you why. I have no idea. But for whatever reason, the market is wanting to buy these types of stocks. And so when you get that kind of momentum moving in an industry or a sector, it's time for you to take notice. And we have taken notice, and we've started to take some positions in some of this stuff because of so. Another stock that we have some exposure in that absolutely has knocked everything out of the park is Kava. Once again, couldn't tell you why. Restaurant stocks are going nuts right now. We've had a couple different positions in restaurant stocks, Sweet Green being one of them. We had a brief position in Shake Shack. We have a position in Kava. Hard to say that this is a bad trade, right? Everything pretty much worked out the way that we had expected. It doesn't always work that way, but the add here off of the $70 pivot allowed us to sit with a nice profit cushion in through ER. Now the next price target's $100 area. This has been a fantastic trade for us and something that we've been able to manage effectively the entire time. We'll see if we get up there off of that price target relatively soon. It feels like it just wants 100 for whatever reason. VLTO is a great example of that type of setup that GEV was, where we're just buying the IPO range breakout high. If you can justify getting along that high and risk that high, right? So as long as we're above, in this case, VLTO, as long as we're above 83.5, it seems like the path of least resistance is going to be higher than lower. If we flip back underneath 83.5, maybe we're too early and we should wait. In this case, it was the right call. We got long at the 83.5 pivot, and we've been able to hold the entire time. We were also able to add up here. It's a very logical level to add at 94.5, right? We have pulled back slightly over the last few days along with the broader market, but there's no reason to freak out about VLTO unless we pull back below 94.50. At that point, we might want to stop out of this particular add. We still have the original entry on the books. We'll see how we want to play this. But as of right now, you know, that GEV trade that we were just talking about, a lot of traders are going to look at that and go, I don't want to touch that with a 10-foot pole. There's not enough information there. We look at that and go, buy the range breakout. These things run in certain market conditions, and right now the market absolutely wants to run with this. And so why would you not want to own this? Next one that we're looking at here that looks relatively the same is Shark Ninja. Shark Ninja, we just bought the all-time high. We risked 54. And it took off. It's really been one of the easier trades that we've taken. We haven't really had to do a whole lot. We added in prior to the gap up on earnings, and we're looking at potentially adding again here. This has been a really easy and kind of a layup trade for us. But these are big wins, man. These are stocks, you know, everyone's talking about NVIDIA. Everybody's talking right now, talking about Salesforce. It's these little like mid cap transitioning potentially into large cap kind of recent IPO stocks that have really hit it out of the park for us this year in particular, but really starting back in Q4 of 2023. So you can look at Shark Ninja there. You can look at the last one here that we're currently in right now that has relatively the same setup as Finn, right? Just buying the all-time high breakout. This one took a little bit longer to get moving. We were able to add in above the $40 area breakout, and here we are consolidating up near 44, 45 bucks. So all three of those setups, Shark Ninja, Finn, and VLTO, the exact same setup across the board. We don't have to reinvent the wheel. It's working right now, so continue to look at that stuff. Here's a name that popped up that I thought was interesting. There's no trade idea on this from us, and this is kind of a weird-looking chart, but these are the types of charts that I've noticed over the last 6 to 7 months that really just start running. Once you get up and over some sort of IPO high, which in this case would be like 25, 25, 25, they just tend to run. I have no idea what this company does. It's something that I'm going to look deeper into, but this is on the list today, so I feel like calling it out here. BTSG is a name that we're looking at potentially owning. You can kind of see the general idea here. We want to own it above that 1175 area. As of right now, we're still basing underneath it. I love when stocks base underneath their pivot points because it shows me that someone's either accumulating or distributing shares. And in this case with BTSG, I would assume this is accumulation prior to the ramp up. So any move up and over 1175, hopefully with some higher volume, I'm going to be looking to take advantage of that. The last one I want to talk through right now is Coors, a speculative play that we were able to grab and hit our price target yesterday. This is a recent IPO'd crypto mining name. Depending on whether or not you wanted to grab shares or options contracts was completely up to you. I think the shares trade probably the better idea here because this is under $10 and it's super volatile. As of right now, off of the 425 entry when it was originally going, we had a max profit of about 26% in just 2 or 3 days. So a big move here from shares. It is a small or a mid cap. I don't remember what it was. It's a small cap, 890 million. This is a very speculative play here, but it's moving. Hit our first price target. We're able to take a little bit of profit off. There's no way that we can lose on this trade at this point. And that's it. I mean, these types of setups have been working for us. I have no idea if Coors is going to eventually shoot up and turn into the next Riot or Mara, but a really nice and effective trade here just a few days ago. It only took 2 or 3 days to get up towards our price target. So this is the type of stuff that we like to put out on this Future Leaders Report. You can see a bunch of the different names that we were looking at. A lot of the setups are relatively the same, guys. You don't need to reinvent the wheel, right? Every week I talk about Shark Ninja, Fin, and VLTO. You guys are probably sick of it, but there's a reason why I'm talking about them, because that's a replicatable process. That setup in particular is working and has worked in the past and will work in the future. Given current market conditions, I know everybody's afraid that the end of the world is coming. Probably not happening while these recent IPO stocks are still breaking out to all-time highs. I know trading can be difficult, particularly in the crowded areas of the market. But if you can think outside of the box and you're willing to buy some of this stuff that maybe isn't as heavily talked about on TV or FinTwit or wherever you're watching your news, there are some hidden gems out there. And that's kind of what I want to focus on here with the last 30 seconds before we call it a session here for the Future Leaders. I'm going to go ahead and let you guys see exactly what that report says one more time, is that knowing what you own is arguably going to be more important than when you own it. It's easy for somebody to say it's a bull market, you need to be long stocks, and that's absolutely true, but knowing what you own is going to be the more important part. We just released a newsletter out for TTI members. Please read it if you haven't already, talking about this specific concept. If you've owned consumer discretionary, the average consumer discretionary stock over the last 2 years, you have missed out on a majority of this bull market. Names like Nike, Starbucks, Home Depot, Lowe's, Tesla, it's crazy to think about, but Tesla have not performed well over the last 2 years. Tesla's down 55% from its 2021 highs. I mean, this is kind of unbelievable sometimes to think about how bad Tesla has performed. And I know that's going to hurt some people's feelings, but from a trading perspective, this has not been a good name to own since it peaked in November of 2021. That's a 57, we'll say 55 because I'm probably shift clicking wrong, but a 55% drawdown. So to say that we're in the second year of a bull market, that's great. But if you've just been stacking Tesla for the last 2 years, well, I mean, you're literally at break even if you'd stopped or if you started buying in November of 2022. You just haven't been able to participate in this. So understand what types of setups are working. Understand where you want to be long in the market, where maybe it would be best to be sheltering away from the market. As of right now, that Future Leaders Report puts you in front of some really good opportunities that are currently breaking out into either all-time highs or continued all-time highs. My name is Hamilton. I'm here at the Trading Initiative. That report and reports like that we send out every day, 7 a.m. in the morning. Link is in the description below. I highly encourage you to check that out. If you don't find value in it, just unsub. It's completely free. If you do like this type of content, though, I'd love it if you subscribed, left a comment below, and I'll catch you today, 4:30 p.m.